small finance banks. Ujjivan Small, AU Small, Jana Small Finance, all of these names have one thing common, and that is small. But the interest rates they are giving are definitely more than small. In fact, for senior citizens, they can enjoy a rate of more than 9% if you invest in a fixed deposit by a small finance bank. So what exactly are the terms and conditions, if you could call it that? Is a small finance bank for everybody? And very first question is, how does a small finance bank like the ones that we have listed out here differ from your HDFC Bank, ICICI Bank, so on and so forth? To talk about this and more, we have with us Anil Rego, founder and CEO of Right Horizons. Mr. Rego, thank you so much for joining us on the Money Show. We just had those interest rates appearing on our screens a moment earlier. And if you look at it, the 1 year interest rate of all of these banks are more than 8.5%. So, Mr. Rego, I would like to start off first by understanding, and then we can talk, more in depth about the other topics. How does a small finance bank differ from a regular bank like an HDFC Bank or an ICICI Bank, so on and so forth?
Small finance bank is a niche bank in India. There was a separate regulation by RBI which allowed small finance banks, and a key objective of RBI was to try and focus on small scale sectors like SMEs, unorganized entities, individuals who would like to borrow and run their businesses. So basically, a small finance bank is a bank meant to take care of some of these smaller entities which may not get taken care of by some of the larger banks. And so typically you will find smaller finance banks give smaller ticket size loans. They also have smaller size deposits, etc. So it is trying to take care of the next segment which possibly the larger PSU banks and larger private sector banks take care of.
All right. So, Mr. Rego, how is it then that these banks can offer a higher interest rate to customers for the fixed deposits and other deposits as opposed to maybe your regular bank?
Yeah, so I guess one thumb rule is they may not have the credit worthiness of, let's say, an HDFC Bank or sort of an SBI. Okay, so you will find that even on the private sector banks, when you find smaller banks, you may find a higher interest rates. So on similar terms, you will find, the small finance banks have a slightly lower credit quality, and hence they offer, interest rates to depositors which are a little higher. The second key aspect of it, and this is what RBI also is trying to do, is to try and find some of these new age banks which possibly use technology a lot better and have a very tight and low cost structure, and because they are new, they can plan their bank that way, and so it not necessarily needs to be only about credit worthiness of them, but also because they manage their own internal finances a little more tightly. They end up coming there. Plus, they also lend to smaller sized, smaller ticket loans, etc. So you will find again the guys that they are lending to, they are able to lend at a slightly higher interest rate as well, because they are smaller than maybe some of the large corporates which borrow.
Okay, now it certainly is very tempting, right, that if these small finance banks are offering deposit rates of more than 9%, 8.5%, let's just say that, up to almost 9%, for a 12 or 18 month time horizon. But it's at that point as well that we should have our antennas searching for any sort of terms and conditions or asterisk that has been put. So in this case, Mr. Rego, is there anything that our viewers should be cautious about before they decide that, okay, I'm going to go for this FD in a particular small finance bank?
See, like today with making any debt investment, including let's say a company deposit or even today a bank itself, I think one key aspect that they need to look at is what is the credit worthiness of the bank. And that becomes a very, very important factor. So how creditworthy is the bank, which means how safe is your money. So if you are investing in an FD, you're probably looking at it from a lower risk perspective. So I think the first aspect you need to look at is, how creditworthy is the bank. The credit rating is something that you can look at. Typically, you'll find some of these at, a double A or double A plus, double A minus. You may also find A plus. So, ideally look at a double A plus type of rating. The second aspect to look at it is, what is the interest rate that they are offering? Do you get something which is closer to that at a similar or better level of risk, and then you would sort of go and use that particular avenue. The third is, how easy it is to exit, because if you need money in your bank, it's very a lot easier. Of course, you have exit interest rates. You need to look at that as well. And so I think these are 2-3 factors you need to look at, before you sort of start investing into some of these banks.
Okay, all right. Now, when one does want to select a small finance bank to put his or her money in, now the question is, how should you select it? Sometimes the data, like you mentioned, like the credit risk profile of the bank, is not so easily available. So could you give our viewers some more easier aspects to understand, some parameters that the banks should take before the viewer makes the decision that, okay, this bank looks okay for me to put my deposit?
I think the credit rating is still one of the easiest things to do, because maybe investors will not be able to look at what is the profitability, balance sheets, etc. I think if you are able to, that's also a good way of looking at it. You look at how profitable are they, for how many years are they profitable. If you're able to look at ratios a little bit, debt equity, etc. But I'll stop there because it may get a little too complex for people. But credit rating is definitely something which will help you a lot more. And AAA is sort of the best credit rating. Ideally you will not touch something which is less than an A. So like I said earlier, something which is AA or higher is what I think you can look at as a simple thumb rule. AA plus is something that you can also look at, and possibly stop there. The second aspect is, when you're looking at banks like these, don't put all your eggs in one basket. Okay, so look at maybe diversifying across 2 or 3 of them. And the third aspect, again, when you're looking at it, is to say that, okay, let me cap my overall exposure to the SMBs, right? So you can possibly keep a cap depending on your risk appetite. If you're a senior citizen, etc., even though you may love to have a higher interest rate, you should be looking at actually a lower risk. So look at lower risk levels. But if you can take a higher risk, maybe go up to 15%, maximum maybe stretch it out to 20. But ideally, I would think anywhere between 10 to 15 is where you can expose yourself to SMEs.
Mr. Rego, you mentioned that credit risk profile, and you think that would be the most easiest for our viewers to understand. So could you help us with where we can find it? I mean, is it on the RBI website, or if we request the bank, if you could share that with us, where we can find this information?
The bank itself may give it to you, number one.
Okay.
But I think today you can just go and do a web search, Google, and you will find it. The name of the bank, credit rating. I think you should very easily find the latest credit rating of it. Okay. You would find it on RBI sites now. It may be a little more difficult to get it there. Where do you find it, etc. So I think just a Google search should be the easiest way to get across to what's the credit rating. Of course, the banks also need to publish it. So when you're making a deposit, you can also go and ask for it. So either of these mechanisms you can do, and you can easily find the credit rating.